MAO recording begin. Okay, right. Good morning to all of you. All right, so let's start our morning MAO. I know it's at 9:09 right now. We're just only a few minutes away from the Hong Kong market opening. Now, some people was very happy with me yesterday again when I tell them the Hong Kong direction, and of course they make money. I'm happy for them. But of course, some people tell me, Kel, why don't you just all the way do Hong Kong calls for the whole day? Seriously. Dear all, it is really not possible. All right, I have my day-to-day thing to do, and I have been very busy because this coming Saturday I will have our revision. I need to prepare myself, and of course this Sunday, there's something on for some people. All right, then after that, following week we have a lot of other stuff. So seriously, it's not possible. Okay, all right, okay. Second thing is right. Okay, so we do the MAO first. But today MAO, the part whereby this morning when you asked me about the KSI part, it will be done at the later stage of the MAO. So today MAO, I don't have any special chart for you because I really run out of time to go do my research. So I decided to talk about KSI at the later part of the MAO. So if you are interested to know more about KSI usage this morning when some of you actually highlighted, then you stay on. But if they say you are very busy, you want to go on your live now, later you then watch, it's fine, no problem, okay? Okay, let's just begin our morning MAO right now, okay? So let me just put on my screen. Here we go. Okay. Okay. Okay, 11th of March, 2021, Thursday, okay? Caption for this morning, Treasury auction demand is adequate enough to Okay, now my English is not that fantastic. So can I ask you this, adequate in your perspective means what? When you say that the demand is adequate, all right, what do you actually mean by that? Can I ask you guys? You guys are all the smart people. You guys are much better than me in English. Guys, tell me, in your opinion, when you say that the demand is adequate, can you tell me and explain to me what is your perspective? Okay, please key right now. I will not answer until I read your message. Okay, I want to just hear from you guys first. Okay, more important. Okay, so we have Benedict says that it's enough. Okay, sufficient. Okay, Adeline also sufficient. Carl also sufficient. All right, so okay, adequate is enough, sufficient. So can I say that? Yeah, I will quote what Gerald have just used. Is good enough, or Fred just say good enough. Then the what do you call enough to maintain, right? Or enough, just enough to just go by it. Can I just say that? Or meet requirement, like say, or acceptable by Noel and Anthony, okay? All right, so basically satisfaction, okay? Colleen one is demand 100%, adequate 50%. Oh, okay. Okay. All right, so when I read this as well, right, in my perspective, I'm my very C6 Angmo, right? If you see that, right, okay, it's just like you go for a swimming test, okay, go for a swimming test. And the coach just say that you adequately passed the test. You know my point? That means that the strokes are there, but not perfect. You manage to finish to the point that I want you. So yeah lah, just like that. Okay lah. That is my point lah. Okay. Yeah. So the thing is this. No worry, Fred. Driving, please be careful. Okay. Right. Yeah. Low is like meet expectation, but they never state what's the expectation. Right? Okay. In a way. So let me explain to you why I have so much problem with this particular statement, because I realize that they are very good with their words, and these words are usually very well constructed to present a view if they want to do that. So you can see now the 10-year yields have started to cross above. Now all the way we have been knowing that the yields always been down. You can see a lot of this article was saying that the yield was down even to the point of almost non-justifiable, not even there. but now it's starting to go above, okay, and people are watching it closely. The German yields, okay, climbing up bit by bit, and of course the Swiss yield got a long way to go. That's what I'm trying to say in this cartoon now. But what it's trying to express here is that, right, there's something to must understand. The reason why yields goes up, okay, you like it or not itself, right, it's because there are sellers in the bond market. We put inflation aside. We talk about just bond market, because bond and yield is directly inversely related, which means that once the bond prices comes down, the yield will automatically goes up. Because the point is this, okay? When people sell the bonds because they want to can cash the money, right? And in order to attract the new buyers coming in, they will relatively have to increase the yield, so people will want to buy. All right. So let me ask you a question, okay? Let me ask you a question. If someone offer you a 1.5% return in an investment product, okay, and then another person is right, okay, offer you a 0.10% investment product, okay, all right, seriously itself, right, you will know that you will definitely choose the 1.5%. You got the idea? All right, true, but the thing is this, if that is the case itself, right, if things look so good, the question is how come, people don't do that? That means that if you have some money on your hand. Oh, Hang Seng open already. Oh, so sorry. Oh my God. Okay, wait. Hang Seng has opened. Oh, I missed Hang Seng. So sorry. Okay, let me bring Hang Seng to you first. Hang Seng. Okay, let's go. Oh, Hang Seng gap down. Okay. Hang Seng has gapped down. Surprisingly, Hang Seng has gapped down. I repeat, Hang Seng has gapped down. Surprisingly, I'm very surprised. Okay. Hang Seng has gapped down. Opening price is here. Okay, that is between the two pivot 1 and pivot 2. But now Hang Seng is trying to go back up again to cover the gap, which is expected to do that. KSI for Hang Seng is red in color. So which means that the market is more towards the sell side, buyers towards the sell. But now the Hang Seng is trading above OP, so naturally the market, people want to buy, you can consider doing that. But if they go to KTR +1 to KTR +3, traders, you just have to be careful. That might be, if the market do a CCYR, then you can look out for sell pockets, okay? Now, the opening price for Hang Seng today is actually near to pivot 2, and I think I've mentioned this several times this week. I say that if the market opening price is near the pivot 2, then be careful. If the market break below the pivot 2, which is 28774, then there might be some selling in the market, because below pivot 2, below OP, and KSI is red, it's a very little combination of selling, okay? Now, of course, you can see Hang Seng for the last 10 days have been coming down. That's why we more towards the downside. And of course, with the KSI is red in color, which later on I'll explain more to you in details. When the KSI is red, I cannot deny myself. I will be more towards the sell side. Okay, so traders, do you have my answer for this morning? All right, if the market go to KTR +1 to +3, if the market goes there, do watch out for CCYR positioning. Okay, all right, the downside could bring it down to how much? Well, at least to the midpoint here. This is the midpoint. Midpoint is, let me take a look. The midpoint is 28,653. Okay, so that is 28,653. So what I'm trying to say is, if later on, if Hang Seng break below 28,774, then Hang Seng has the potential to sell off down to 28,653. But do note, Hang Seng, the last few times when Hang Seng touches the what you call the lower end, about this near the cage support level, it always seems to rebound. So there is some form of buying power at the bottom. All right, so traders, you can actually watch out for that. Okay, so the levels are all given to you, so traders take note of that. Okay. Yeah, so sorry to miss out the Hang Seng so early in the morning. Okay. All right, so go back to my words here itself. So my point is this, okay, we'll talk about the Japanese investors shortly, yeah, you will see my point. So disclaimer as usual, please consider that whether when sharing itself is going to be good for you, all right, adequate for you, all right, in light of your current financial condition. Do note again, I'm not here to give you a crystal ball prediction, okay? I don't have a crystal ball right now, I only have one mic, okay? And my job is to just tell you what I see from the chart and show you my and share you my opinion. End of the day is right, you have to make the final decision. And of course, we say final decision that includes risk involvement, right? You must control your risk. Okay. All right. Sorry. All right, so now the House passes the bill. I mean, yeah, obviously, right? Seriously? I mean, we all know from the very beginning itself, the 1.9 trillion will definitely come out. We all know that. Because even, let's say, all the Republicans don't accept it, which is what happened. None of the Republicans actually cross over. The House will just pass through because of this Kamala Harris, all right? So the problem is, okay, unless there's some Democrats who refuse to take the stand of Democrats, but obviously it's all right. The party members, some of them didn't accept it initially, but after a lot of ding dong and a lot of asking and then rewriting, yes, it went through. So obviously it's like no brainer lah. I put it this way, really no brainer. But end of the day, anyway, it's coming out, okay. But still, 8.5 million people are still out of job or they need some jobs right now, and of course, 18 million people are still waiting for some help lah here and there. So I really hope that this thing really goes down. But let me ask you this question, okay? During the COVID crisis, the very first time when the Federal Reserve came in with $3.5 trillion, okay, into the system, right? Now already 6 months to 9 months has passed, but we still got millions of people not doing well or still receiving helps. Now, of course, obviously it could be the mentality of the people there, but still it didn't really come in. So it's like a big loaf of bread thrown down, but only the crumbs reach the bottom. So I'm not too sure this 1.9 will do what effect, but definitely it's right. If this 1.9 has no effect or doesn't really come to the people, then the question mark is this, what's next? But of course, on a flip note now, the people now is waiting for the 1.9 trillion because there'll be $1,004 coming to their bank, and then they will be using it for what? Now, some people say they're going to buy into products, for necessity. I can tell you this, buy stocks will likely be the main thing. So when the stock market goes up, it's up because of that. Well, the market is buying on this. I'll talk about the GameStop later. Now we talk about this one, the 10-year bond adequate. Okay, now why do I say that? Now this guy is right. Usually I don't really want to hear his voice because I find him very overreacting, a bit overacting. But just now I saw his video, I was caught surprised with what he said. But I realized that whatever he said, right, apparently was not mentioned in the article. So I'll show you the video shortly. So what happened in the article says that, right, the 10-year yield dropped slightly after the 10 years Treasury auction data showed there's enough demand to starve off fears of what the investors are worried. So, okay. So it seemed that people was not panicking. All right. They're buying the bonds. All right. Now do understand this. The one that panicked was not the 10-year, was the 7 years. Okay. That's a problem here. They didn't really tell you that exact what is happening. The last auction that created a panic was a 7-year auction, not the 10-year. But because of the 7-year auction, it created a panic on the 10-year. Got the idea? Okay. So now the thing is this, undeniable. Because of that, the 2 basis point was dropped off the moment the news came out. So it was a pretty good thing. And of course, the stock market went up. Now, allow me to ask you this question first, everybody. Yeah? Let me ask you this question. When the yields come down, that means that the chance of interest rate hiking will be reduced. And of course, cost reduced, right? All along itself, right? Which indices will benefit? Would it benefit the Dow Jones or would it benefit the NASDAQ? Based on you have been following me and you've been watching the news, right? I'm quite sure, in your opinion, right? If let's say the yield come down, right? Which indices will be benefiting from it? Is it Dow Jones or actually the NASDAQ? All right, what do you think, guys? What's your answer? Okay, so I had it from Lester, Louis, Philip, Eileen, okay, Mohammed, Bahir, okay. All right, yes, it should be the NASDAQ, right? It should be the NASDAQ, right? But the problem is the NASDAQ did not really move. Okay, let me explain to you more. So it was a soft auction, but not enough to scare people. Okay, so it's a soft auction. That means that, yeah, there's somebody there. And after that itself, right? Okay, do note again. Okay, this is what happened, right? Usually itself, that is the, normally there's a lot of people, but this time it's much lesser. Okay, do understand this is very important read. The Treasury Department has printed roughly $3.6 trillion of new government debt in the past year to shore up the economy that was rolled by the COVID-19 pandemic. So you understand this. The Treasury basically got the money from the Federal Reserve. That is how it goes. That's how the numbers actually flows. And because of the increasing supply of the government debt, which is the bond, and a weak demand in the February bond auction, which is a 7-year auction, that pushes the interest rate higher. So there's an increment of supply, all right, and lack of demand. And that causes the bond price to fall and the interest rate to rise. Okay, so the thing is this, all along itself, this 10-year have been flirting with the 1.6%, right? That is the reason why it's pressurizing the equity market. But we all know that it's actually the NASDAQ was the one being beaten down. All right, so the thing is this, let me just show you this one here. It's very important. This actually article was the day before, but I realized that it's more important today to look from it again. So normally stock traders, they don't normally talk on the bond market. We all know it's very boring. It's just only it's a transitory thingy. It's you want to borrow money, you pay for it and you get the interest. So nothing much. But this time around itself, because of the yield is going upwards, right, at the current pace right now, the stock traders get a little bit into jittery mode. All right, so you can see that this guy says that it's a long time since the stock traders have cared about the bond auction. And I tell you this, they'll care this even greater as the days and the weeks goes by. All right, it's going to be very important. So why do I say that? Now, this is going to be very important. To those people who asked me this morning, you need to pay attention to this part of the detail. Now, if the further stock rallies depend on the rate, have they peaked? So which means that now the 1.6% was triggered, right? But then after that, it's been pulled back down to about 1.52%. So lost about 8 basis points. So theoretically, it's all right. That means that a lot of people say, okay, that's it. The bond market will not go down further. In fact, it will start to rise again and the yields will go down. So this is what everybody is saying, okay? So there's nothing wrong. And we can see that the 1.6% was tested several times. And every time we hit there, the market come up. So the question is it because there's a resistance at 1.6% or because there's some artificial pressurizing it down at 1.6%? So key point is just remind yourself, 1.6% is a very, very important figure. 1.6% is a very important figure. So which means that as long as the market do not cross 1.6%, for the equity market itself, right, you are safe. But if the market ever cross 1.6% and hang above it, or the worst, cross above it and no pullback, that is the panic button. Okay, guys, so I'm going to tell you this. Put the thing 1.6% somewhere on your drawing desk or trading desk. As long as the 1.6% doesn't reach, you're fine. Okay, so rather than ask me, Kel, when is the market coming off itself, right? Now I'm telling you this, 1.6% is a key marker right now. So the thing is this. Much depend on the outcome of Wednesday, which is yesterday's. This is Tuesday article. Okay, some stock bull believe demand will be strong. Now think about this. Some people were expecting yesterday's auction to be strong, not adequate. Okay, particularly from overseas buyer like the Japanese, whose 10-year yield is at 0.1. Oh my God! Think about this. Imagine you are a Japanese bond trader and you know that, right, US offer 1.5% to 1.6% and your own country offers 0.1. Which one would you buy? It was pretty clear, right? I mean, any Dick, Tom, Harry will know that you should buy the US bond at 1.5% or even 1.52%. The question is, it was adequate. You understand my point now? This is the joke. Okay? This article was written 2 days ago. Yesterday was what happened. So I purposely bring you back to 2 days ago, what the market was expecting and what the market actually tried to tell you yesterday. So apparently itself, right, they tell you this. If the rate basically go back down to 1.5%, then to some people, which another investor says that, right, it'll be very good to buy into technology shares. So again, they tell you this. If the rate come down to 1.5%, obviously, there'll be no loyalty to those epicenter stock. They will buy into tech. So you see, on Tuesday, they tell you this. On Wednesday, the auction happened. On Thursday, which is today, let's see what the market reacted. So this is Santelli, you know him, right? He's on CNBC, and he always will have his view on the market. So he actually gave the auction a C- grade. Oh my God. I mean, seriously? My C-? Why? I thought it's adequate, right? And then after that itself, right, the only good part is that, right, the 10-year sales direct bid was 17.8%. So there was a bit more bids in the market. But allow me to just go deeper with you, okay? This is a time whereby 11:05 a.m. when the news came out, the auction result came out, right? And of course, immediately you can see the yield coming down pretty fast. So yes, indeed, the adequate demand actually made the yield went lower. Now, write it down somewhere, it's 1.54%. So 1.6% is the threshold level that the market is using it as a form of guidance. But the point when the market came out, yesterday's number was 1.54%. Now, you guys know that, right? Seriously, I'm a guy who goes into numbers, and to me, numbers are very important. If you're telling me that the market is buying at 1.4, they are okay with the quantity today, and then the market is at 1.54, then basically it's very upfront. Tell me that the market cannot cross 1.54 this week. If the market crossed back 1.54 this week, then whichever means, all right, those people who've been buying and sell, right, didn't get a very good deal. And obviously something is wrong here. And if the market holds above 1.54% towards 1.6%, I can tell you the market will definitely ring a bell. Got it? Okay, this one is, you can understand where I'm coming from, right? So I'm a very into numbers person. Okay, I really believe in numbers. I prefer to do that. So let me bring you what he says, a quick video on what he say with regards of the yesterday bond market. Let me put up my volume up for you.
Have you ever seen greed like this?
Okay, there's some advertisement right now. Just hang on for a while.
Facts, more clues, more greed. Season premieres March 29th, 10 Eastern, CNBC. Get yours.
Yes, I'll tell you what, everybody is anticipating this auction, primarily because yesterday's 3-year short maturity, we're really thinking about that 7-year that was horrible a couple weeks ago. Well, 38 billion 10-year notes yielded 1.523. The one issued market was trading 151.5, but yields been dropping all morning. I gave this one a C minus, Charlie minus, and I think I was being very generous. Let's go through it, shall we? 10 auction average bid to cover 2.42, a little bit light here at 2.38. 56.8 was indirect. That is the lightest since November 20. 10 auction average, as you see there, 61%. Okay, maybe the one bright spot, maybe the most important bright spot, direct bidders, that might include maybe the Japanese, 17.8, a couple and a half points above the 15% 10 auction average, and 25.4 go to primary dealers. That number is a bit too high. So none of the metrics are really spectacular. I could have gone a D plus here, but I do cut some slack that the overall market was sliding in yield, rising in prices. The equities remain firm. And of course, long maturities are what it's all about at this point, especially considering this morning might be the last bus stop of the low CPI inflation data for this cycle. Melissa?
The last bus stop. That's a nice way of putting it. Rick, thank you.
Okay, guys, you have heard what he has to say, the last bus stop. Oh my God. I mean, that is a very strong statement, and giving a C minus for auction like this, honestly, I cannot, I'm not too sure why, but that's something refreshing, right, for someone. Okay, so that is what this guy, Santelli, has to say. All right, let's just go deeper. Okay, let's just go much deeper. Okay, now, this is what you're seeing right now. The timing is again based on the auction timing. Okay, look at it. Now the NASDAQ have been coming down at 13,250 all the way dropped down to about 13,100. Okay, then after that, before the auction, right, you can see that there was a recovery of almost 100 points. So obviously people are looking at the auction to be positive because of all the pent-up thing. But the moment the auction came out, yeah, it was adequately enough, okay, sufficient accordingly. All right, straight away, instead of reacting towards the upside immediately. Now, remember this, the yield dropped down instantly. Yeah? The yield dropped down instantly. So obviously, it's supposed to be doing well for the NASDAQ counters. But instead, the NASDAQ came down instead. This is something incredible. And after that itself, right, yes, indeed, after that, it found some strength. It tries to recover. But the moment that the market go up back to 13,150, straight away, the selling came in the last hour and slammed down the market to close it near the low of the day again. So seriously, you look at all the FANG share like Amazon, Alphabet, Facebook, Netflix, you do not see that they are accepting this. So the yields are actually coming off as what everybody looking at, but then the tech shares are not moving. But of course, you can straight away tell me, Cal, now the market is looking at epicenter stock, so you can put away the techs and then concentrate on the epicenter stock. Okay, if you're telling me that is right, you're not wrong, and I'll agree with you is that. But to me, it's right, it doesn't bite here. To me, that is the reason why I say this is going to be very scary. If later on, if the yields do go up to 1.54% or worse, 1.6% or even higher than 1.6%, you can mark my word itself, the NASDAQ will sell down even greater. You can really mark my word on here itself. This is going to be very terrible. And that's the reason why yesterday I was telling you guys that those who have Tesla, you try to get out of Tesla. Okay, let me bring you Tesla right now live. Now, the Hang Seng is still trying to go back above, trying to stay positive after the gap down. Not too sure why it gapped down this morning, but probably the Chinese market is going to be part of it. So the thing is, the Hang Seng now is trying to go up, right? Let me just go live in the market right now. 5-minute chart. The Hang Seng have triggered the KTR +1 and +2, and now it's a CCYR. It's a CCYR with the color turning red potentially. Sorry, my bad. It's not CCYR yet, almost, okay? So it's a BMB. Sorry, that's what I'm trying to say. If the market is a BMB and if it do actually goes, it's a CCYR, then of course, if it breaks down here, there'll be some selling to this point. But at the moment now, there's no CCYR, only a BMB. So there's nothing to be concerned for at this moment. Okay. Now, sorry, I deviated. Let's bring you back to the Tesla shares right now. Now, this is Tesla share yesterday. Now, Tesla share, you can see the bar is yellow color, but you must be very careful. Yesterday, Tesla, the opening price was here. This was the opening price. So Tesla opening price as a KCB at 719. Yeah, I think 719. I think, wait a minute. Hold on. There's KCB at 715. Sorry, 715. So there's a KCB at 715, and yesterday the Tesla high was 716. So it touches the KCB level perfectly and pulls back. And once it went below pivot 1, which is 705, Tesla came all the way down. Now, why do I say that? Because the KSI the day before was red. And that's the reason why I want to explain to you later on after this MAO about how to utilize KSI. How to utilize it. I still think that many of you guys are not capturing what I'm saying about the KSI. KSI is not an indicator that go with prices. If you want indicator go with prices, you can put stochastic, you can put other indicator like RSI together with it. Okay, it will work wonderfully fine for you. But if you want something extra, something that you want to know that people doesn't know, then that is how you use the KSI to advantage. So yesterday when I saw the Tesla was opening at this 709, then when it touches the KCB at 715, level, and then when it pulls below 700, I know that Tesla is going to come down because Tesla KSI was red. So straight away it's right. When Tesla broke the 705 pivot level, it was a sell immediately. That is how you use KSI, and not because that KSI is red, the market will come down today. No, KSI doesn't work that way. If I repeat like the KCX yesterday, if KSI by itself can predict the market, I'll be the richest man on earth already. Trust me on that, okay? So that is the wrong way to use the KSI, all right? I'll explain more in detail shortly with this Tesla example. But more important thing is, if the yields are down and Tesla is still coming down, it is very scary. So that's the reason why I say that something is not right. Now, I'm not here to judge anything, but I'm just informing you that this is something that you have to be very careful, because this yield is here to stay. Because now $1.9 trillion is going to enter the market. So definitely, if you're to buy what Yellen had been saying, you buy what Powell has been saying, that, okay, because the economy is recovering and it's opening up, obviously inflationary will come in, then the question mark, it will be this. That means there'll be more money spent, right? Okay, maybe the epicenter stock market will go higher, but the cost of living will increase. And obviously when that happens, prices goes up, and what will happen? So the yield will generally go higher. Correct or not? And if that is going to happen, then what will happen to the tech share? So actually, this $1.9 trillion entering the market is going to have a big problem, especially for the tech sector. This is something that I'm going to say this upfront again. Please be careful. All right. I'm not saying that to call a curse on the market, but you have to be realistic of what you're seeing right now. Rather than just focusing on what people say, oh, it's sufficiently enough and demand is there. Seriously, pay attention to detail, pay attention to the numbers, and look and compare and contrast with charts and the data and the stocks. You will know that something is not right in this equation. Now, do note once again, if financial market is about 1 + 1 = 2, then I'm so sorry, then everyone here itself should be multi-trillionaire today. Because if 1 + 1 = 2, then it will be a very easy walk in the park. But the question is, do you think that 1 + 1 = 2 for the financial market? So if people believe that 1 + 1 = 2 for the fund is how you use it for a financial market, please key 1 + 1 = 2. Now, if actually you don't think so, you think that 1 + 1 is not equals to 2, please key 1 + 1 = 3. Okay, so you pick the number, this equation, just for the fun of it, key it into the group chat right now. So I repeat myself once again, if you think that the market, okay, if you think that the financial market is always, you do this, you do that, you get an answer, 1 + 1 = 2. If you believe in that, key that into the group chat. If you think that actually no, you need more than that result, it's a 4-dimension jigsaw puzzle, you need more than that result, right? Then you put 1 + 1 = 3. Okay, so that is the how we differentiate your personal take. Now, please again, do not be swayed by whatever the result or whatever your friend texts here itself, because you are entitled to your own thinking. If you think 1 + 1 = 2, then leave it there. All right. Okay, so we have 1 - 1 = 0 from Terence. Okay, we have 1 + 1 = 3 from Philip. 1 + 1 = depends. Okay, all right, so we have a view permutation here. Okay, anyway, my answer is this: 1 + 1 definitely not equals to 2 in the financial market. All right, that is the reason why we are here. So that's the reason why you can see myself repeating daily, and no matter how, the answer is still the same. Okay, GameStop. Wow, if you have missed GameStop, look at it. How incredible. Again, the insanity came back in. Now, yesterday, in the first 3 hours of the market, GameStop ran up by almost like 30%, right? Okay, from 270 all the way to 340, right? Even bridging the high previously before the Reddit attack. This is nuts, right? But after that, suddenly, again, out of nowhere, the market just plunged from 340 all the way to 200 level. Wow, 340 to 200. That means it's down by almost 30 to 40% in just 40 minutes. My goodness. I mean, there's no control in this. There's no circuit breaker. There's no one bothered. This is literally cowboy town. And of course, this is the craziness of market manipulation at best, and no one is answering for this. I mean, this is really madness. So for those people who bought GameStop shares back then was at 150, 200. I think they're laughing all the way today because they easily multiply their income just like that. And again, who went in to buy? Well, it's very clear. When I saw this movement here, I look at the forums full of people jumping into GameStop. Now, in fact, some of them say, whole GME to the moon, we're going for 300. So it was a very coordinated thing. It seemed to be someone do know what is going to happen. And the silly part of this is that the retailers jump in. They bought at 340, 320, 300, 280 on the way down. Oh my God. And now they're telling you that seriously, this is, market movement, the normality. I almost fainted. I mean, end of the day, this is nuts. This is really nuts. All right, guys, end of the day is when you see a market moving like this for the stock market, you know that it's definitely insanity. Just that the question is, do you believe, do you want to stand at the right side, or you prefer to be part of it until it ends, or you want to be catching this last wave to maximize this before you stop? It's all up to you as an individual. Now, Brazil itself, right? I'm so sorry. Whenever I see articles that not in the mainstream media first, but I got this inkling that this will come out in the main header. And truth be told, 2 days ago, I tell you about Brazil having problem. And yesterday, Brazil, the coronavirus death has hit record level again. And now this is how Brazil numbers are going up. In fact, it's going up at a very alarming speed. And of course, the hospital there is close to collapse now. So again, of course, we say about Brazil and nothing to do with me, right? The thing is that we're so far away. Yeah, I understand. But I told you, Brazil itself is one of the top 4 exporters of natural resources and definitely a lot of commodities. So if Brazil is having a problem, a failure in Brazil economy could be a very detrimental problem because a lot of banks have lent money to Brazil companies there, and if Brazil economy really get hit, then there will be a sudden repercussion accordingly yourself. So I'm just informing you guys, and this is my take, and I'm so sorry. It seems like whenever I see something before the market sees it, and things really happen. All right, so that is Brazil for you. So let's look at the US stock market. So of course, again, if you're buying the point that it is because that the yields are coming down and that will actually benefit the epicenter stock, then of course that's why the Dow go up lah. I can't deny this. Now, of course, again, when the Dow go up itself, people will ask this question again and again and again. Cal, take a look now, okay? The market right now, okay, example like the Dow example. Okay, sorry, yeah, I'm running here and there. Okay, the thing is this, but ask me, Cal, you have been bearish in the economy, though you've been calling for buy on the Dow. The question mark is, when will you be bearish in the Dow and the stock market comes down? When I again ask this stock question, right, it's always a very important, then I can understand straight away how Michael Burry feel right now. I mean, the thing is this, I'm not saying that I'm at Michael Burry level. I'm nowhere near him, all right? His understanding of market is way beyond me. And of course, his money is way much in millions time more than me. The question is, but I do feel what he meant, is that end of the day itself, right? You can tell people that the problem is there. But if you do not, open your eyes to see it and feel it yourself, right? It's pointless, because when the market want to push and draw all the money towards them so that they can feed off on them, all right, the market will generally go higher. If you look back into history at any one time, before the market hit the real top itself, right, the movement has to be parabolic. And the Dow Jones recently is parabolic. You can see it's like 1,800 points in just 3 trading days. If it's not parabolic, then I'm not too sure what is parabolic in your opinion. But more important thing is this, when that really happened itself and you realize that the fundamental is not following through, that is usually one of the key signs. So allow me to say this once again, I can't tell you exactly where's the top, but definitely I can tell you that I already said, right, by mid-March itself, you have to be very careful. So today is Thursday, 11th of March. I already tell by mid-March, you must be very careful. And April could be a bit of selling, all right? Because based on the normal, that is how in seasonal pattern that is always that it is. So I'm saying if this MAO, you can quote it down and let's see what will happen. But again, to my point is, rather to attack the strongest, I rather attack the weaker one. So that's why I rather short the NASDAQ at any recovery than short the Dow. This is something that you must understand. Huh? So you can see the NASDAQ is the one that I yesterday keep on mentioning, that NASDAQ will be more like any rebound will be a good sell. I repeat, any rebound will be a good sell. I'll cover on NASDAQ shortly, all right, in the KSI segment. So of course, the Dow rally, the Dow rally 460 point last night, okay? Wow, okay, adequately it's like, wow, okay, the market is really strong and buoyant towards the upside, and people is very happy with that, right? Indeed, it's very happy with that. Okay, and you can see that the main gist of it is because they are buying into that the coronavirus bill is going to come out, and that will basically help the pro-cyclical stocks. So more and more traders are jumping into this, particularly because of that reason. Okay, so guys, so that is the reason why you have the Dow going up. And of course, even a small cap Russell 2000, it also benefited from the market movement. You can see that. Okay, it went up by 1.8%. Okay, 1.8%, right, at the same time. Okay, so that is again the reason why the market is so bullish right now. Okay, so that is whereby I keep on reminding you guys that this is something that you must take note of. That's the reason why things happen. So traders, just be careful on this. Sorry, just give me a moment. Okay, sorry, moment. Sorry. Okay, moment. There's a little bit of messages coming in from my friend who need some important help live. Okay, I mean, I can understand. This is very normal. Just give me a short moment, guys. Apology. Okay, settled. Okay, yeah. Okay, sorry for that. Need to really do a bit of splitting here. So basically, it's all right. The morning news right now, they are still very firm with what is going on. The market is still very happy. They think that the stock market will continue to rise, and this is what actually really is happening in the market right now. Okay, so it's full of a lot of buying at the moment. Basically, that is what is happening. Okay. So let's look at Dow Jones in particular. Let's look at the Dow Jones and let us go through this. Okay, why the Dow Jones basically went up yesterday. Now the opening price was here yesterday, right? Okay, so it's between the two pivots. So because it opened between the two pivots, so obviously yesterday the KSI was green. Yesterday the KSI was green. So since the KSI was green, so obviously the market will be more towards the buying side, right? Isn't that what you know from KSI? So with that understanding here, straight away itself, when the market goes up, all right, it went all the way and it went towards the pivot in this case. And obviously it goes there to, it was drawn like a magnet because the KSI was green in color. So that is the thing why I keep on reminding traders is that the KSI does give you a very good insight of what the market would be preferred to go. All right, so obviously you can see the market preferred to go up. And that's the reason why you can see that the Dow went all the way to pivot 1 itself, okay? So with that understanding, we can now focus on the intraday. You can see the intraday chart will become very clear. Let's take a look intraday. Once the market goes above the opening price, you can see that all the CCRY become the buying. And of course, that moment there was no BMB triggering anywhere. So obviously that you can't really use the strategies, but at least you know that, right? Because the market stays above OP and above the, and is the KSI is green in color, you focus on buying and you look at the bottom here itself, the KSI all the way was green. So you can see what is happening here, a little bit of sharing. The market came down, right, during this area, but you can see the KSI was green. So conventional indicator will make you sell because the price is coming down, right? Conventional indicator will make you sell. But for us to sell, right, you shouldn't be doing that. You should look out for turning point. So once the market has any turning point, you look for buy instead. Okay, look for buy instead. So that was what actually happened to the market. Okay, so that was what actually really happened to the market. And of course, the market after that rally up all the way, as you can see right now on your screen. Got it? Okay. All right, just saw messages coming in non-stop. Okay, I'm just going to just zoom that in now. Okay, about 1 minute. Okay, so this is Hang Seng. Okay, Hang Seng has recovered from the bottom. Hang Seng has recovered from the bottom. All right, even though the KSI was red in color, but I told you as long as market stays above OP, the market will stay on the upside. But of course, if the KSI red in color, you just have to take profit along the way. So let's go to 5-minute chart. This is what Hang Seng did. The very moment it opened, it shoot up all the way. Okay, there was no holding back. That's why my phone is full of messages right now. And you can see that this is Hang Seng, though there was no way you can short the Hang Seng based on the 5-minute chart. No color change, so you do not do that. All right, and of course now Hang Seng has breached all the way. So I'm not too sure what bring the Hang Seng so much higher. Okay, so much higher. And then after that, you can also see that, right, probably the Chinese market today is going up. I haven't had the chance to look at it yet, but most likely that is going to be the point there. Okay, cool. Okay, so traders, you must follow the rules. Do not jump in just recklessly into the market. Okay, so that is how the Dow Jones yesterday propelled itself higher. Okay, so now we have come to that part. We just go into the technical part of the market. Okay, this is what you've been waiting for, right? Okay, hold on a minute. Okay, now this is the Dow Jones, as you can see right now, the Dow Jones. Okay, the Dow Jones this morning trading around the opening price now. The Dow Jones have breached past my technical point. So seriously, theoretically, I must redraw my trend line, but I won't. I will leave it there for one more day because we have seen this happening before. Okay, I'll just give it for one more day to see whether the market will do something like this. Because the last time this actually really happened. Can you see that? This thing actually really happened. So now there is a bit of inclination that this might also be happening. So let's take a look further first, okay? But of course, if the market stays above the OP, then this thing will not happen, right? Now, yesterday, if you look at the chart, the MLP was here, MLP, right? The market basically came down, touched the white candle MLP, then breached the black candle MLP, and straight away the Dow went all the way berserk, right? So today, the new drawing will be here. The MLP will be somewhere around here, and that technical point happened to be coincide with my trend line. So I'll leave it there for a moment to take a big look here. All right, then of course, the new MLP, a little bit here. Okay, so that's the MLP, yeah? Now the MA is very far away today. The MA, sorry, this MA, sorry. MA is here. MA is 31,573. So it's very far away. All right, it's almost 800 points. So it's pretty bullish at this very moment right now. Okay, so at the moment now, I will just safely say that the market is bullish. So traders, right, if you want to short the market, you just have to follow the rules. Okay, if you're doing any engagement or shorts from the market, just take note. Every time you trade the market, just make sure the risk ratio is there. Stop loss has to be in place just in case you don't know what will happen next. All right. So just be very, very careful on this particular trade right now. Okay. All right. So that is the Dow in terms of the day chart on conventional. Let me show you now the other one. Okay, this is my longer term chart. Well, apparently the Dow has another view now. It went up, right? So it basically changed a bit, but still my 172 days cyclical pattern is still in place. So I'm just going to update this to just inform everybody again and again. Now there's two ways look at it. One way is the Dow continue rally all the way until to the April the 30th. That is one way that the Dow could be going. Or another way is maybe during the mid time of March, like what I say, mid-March, then the market will come down before it U-turn on the 30th of April. So there's two prong to here. It's either the market rally up all the way to where I just said, or the market will pull back and then, start to recover from this point here. So there's two take on here. So I'll let you to decide which one you think the market will be going now. Okay. Okay, yeah. Hold on, that's so full of messages coming in. Okay, all right. So that is the Dow. Okay, this is the Dow now trading the longitude chart. So still bullish side, no changes. Okay. Then let me just hold on. Okay, so let's look at the weekly, also strong, right? Still no sign of giving up. So that is where the market is still heading right now, very strong. Okay, then let's look at today's market right now, today's market. Now the Hang Seng has went up higher, has triggered the pivot one at 29287. But of course, there was no way to enter the market because there was no color changes, nothing you can do. Okay, so you have to wait for a while. Okay, no color change available for the market. Okay, then let's look at the chart right now for Dow Jones. Here we go. The day chart for today, the Dow Jones. Now for Dow Jones today, because the KSI is green in color, the KSI is green in color. Oops, sorry, wrong color. The KSI is green in color, hence therefore, right, it's more towards the buying side. Okay, it's more to the buying side. Now the opening price this morning is between the two pivots. So if the market trade above OP, jolly well, there's a high chance that it will be going towards the pivot one level, and that's 32,614 level. Okay, but if the market fail, then of course there'll be some profit taking. But with the KSI green in color, there's something to watch out for. Now, of course, at the same time, now you can see the market is still up, right? But you can see the KSI already turned red. So that's why I say the KSI itself doesn't really equate to price action, really. Later on, after this, the first segment of MAO is finished, we go deeper. I'll explain to you more on KSI once again, okay? All right, cool. So that is the Dow Jones forecast for today. For the NASDAQ wise itself, right? NASDAQ, in my opinion, it's all right. Yesterday did a doji reverse doji movement. So today the opening price will be key pivotal. If the market stays above OP, then of course the NASDAQ to go higher, it is very possible. But if the NASDAQ goes below OP, then traders, I stay again, then likely there might be some profit taking. All right. Yesterday the NASDAQ coming off, even though the yields went down, it's really a very concerning factor here. Okay. Right, so that is the NASDAQ. And of course, you want to ask me about DAX, right? Here we go. Now, DAX is really on its momental bullishness, all right? You can see that the last 4 days, DAX has went crazy. In a way, it went up by 700 points in just 5 trading days. This 700 points rally is the same magnitude that what happened back then in February. So, of course, the question is, would this continue? Well, we can see for the NASDAQ, it's actually at the all-time high level. So if you do some technical drawing, this is really just drawing for the split of it. You can see the matter I draw it, right, it's really went beyond. Unless I really construct in this manner to just curve fit the chart, then of course it's a bit pointless, but it is going on, all right? So this is what is happening right now on the market, okay? Okay, here we go. All right, so that is the movement of the DAX chart. Okay, so that is DAX. Let's look at the gold market. Now, gold has hit the 1689 level. And once it hit there itself, gold continue to much higher. Gold continue to much higher. You can see that. Okay, so what is the thing that is propelling the market right now? You can also see that, wait, hold on a minute. Okay, so the 1689 level seems to be a very, very strong support in the market. Really very strong indeed, right? You can see that very strong support. So the question mark is, would the market continue to rally from here itself? Well, to me is that as long as the 1689 level stay focused, stay up, then the chance of that happening is very, very possible, okay? The chance of that happening is really very possible. Okay, so let's look at the news right now. The news is very into it. The news are saying that the gold prices now is going to be having some support, but of course somebody is saying that the gold price will go to 1,006. So again, now I have a bit of split view between some of the folks here. So some say it's a stall, some say it's actually a good time to buy, some say that, you know, you should just wait for a while, it can go much lower. So again, this is on personal view. All right, so let me ask everybody here online now, right? How many of you are bullish in gold? How many of you are bearish in gold? Please key your answer now, bullish or bearish in gold. Let me hear you right now, or get some water. Okay, let me see the view right now, waiting for your answer. My Facebook jammed out a bit already. Oh, shit. Okay, some of you are bearish, some are bullish, some are turning a bit bullish right now, right, on gold, right? That is what some of you are having right now. Now, let's look at the weekly chart on gold. You can take a look. This is the weekly chart on gold. This is what I've been telling you guys, 61.8 at 1689. So the point is this, the market hit the 1689 and now it's actually going up, right? So this is something that you must understand is that, right, if you ask yourself a question, allow me to just ask you a question, okay? Let's ask you a question, we see here. Now, back then when you see gold was here, that means that the time you didn't see, okay, let me just show it to you in perspective, Back then when gold was here, and then it traveled down to this point here, all right? Now on this day when the market had a black hawk down, sell off so strongly, right? The question is, how were you feeling, all right? Then after that, when the gold rebounded with a white candle on a weekly chart, what was you thinking back then? Okay, then the history repeat itself, and then you see the same thing happening, and the market goes up. So now the question is, we are having this again, and now it's going up, right? Because it hit some technical point, and you realize that, right? If you feel bullish right now, you are totally not wrong, because bullish for the next 2-3 weeks, it is possible, because what you see that usually when the market hit those technical point, the market will be bullish. So the last 2 times we hit was the 5% marker, but this time around was not the 5%, it's a 61.8. And this 61.8 marker itself seemingly is exactly what we're waiting for, and the gold actually recovered. So feeling bullish is not wrong. And as long as the market stays above the 61.8 or 1689 level, right, staying bullish is absolutely correct. Okay, there's nothing wrong to do that. Okay, that is the point that you need to understand. So the point that I want to stress is this, but after that, if you notice this, after a few weeks of upside, right, once the market loses the reason for buying, that is where the market went down to the next technical level. So what I'm trying to explain to you is, now staying bullish as long as the market stays above 1689, no problem. But if the gold price do ever breaks down to 1689 and lower, then that's it. Okay, traders must be careful, because the downside could bring it down even lower, and that is the 1660 level that I'm actually looking at the market to go down. So this one, we must be very clear that you understand what am I trying to explain here. If all very sure what I just said and understand, all right, please give me a thumbs up first, okay, before I continue, because this is something that I need you to understand why the gold is hanging now at this point here, at this 1689 level, because there is a technical support right here. That is the main driver to this whole thing right now. This is very, very important. Okay, all clear? Okay, all clear? This is very important. Okay, so let's take a look at the gold market right now. The gold market yesterday. Now, yesterday gold opens between the 2 pivots, right? And the KSI was red, and there was blue bar there. So logically, the gold has to come down. That is only will be possible if the market stays below OP, right? If the market stays below OP, yes, then the gold will come down. But the gold did not go down too long. Straight away when it rebounded, right, it went up. And of course, remember this. I told you there's this particular level, 1717. That is from the TSCB circuit breaker. So when the gold crossed above 1717, you can see it went up straight away, and it went towards the pivot 1 instead. Okay, that is what happened to gold. And if you look at it from the intraday point of view, the intraday point of view is all right. Gold initially came down, which is expected. So it went down to KTR -1, expected to. But after that, do you notice that there is a BNB here? There's a BNB here, and then that follows by CCRY, and that gave you the buy signal. Of course, if you didn't buy it, it's understandable. Then after that, the market stays above OP, hit the KTR +1, because that is KSI is red in color. It pulled back down, but this time now it pulled back down. This is the second time now. It's under BNB here. This is a BNB, and of course CCRY with BNB this time now supported by OP is definitely strong, and that's why the gold went up towards the pivot level. All right, so you can see from here, as long as you stick with the principle of the 3 strategies, BNB followed by color change, followed by trigger, usually you will see a fairly good result. Okay, guys, so you are get it very clear on this? Yeah, good. Okay. Okay, I think my internet is getting slowed down today. Okay, all right, so that is the gold. Let's look at gold today, shall we? Now, by the way, just to inform you, I'm going to just run into some of the market right now. Dow Jones has traded a little bit higher now at 32,400 level, around there. Okay, stay there. Now you can see that the price is near the day high, but you can see the KSI is still red at the bottom. Of course, we do not use today's KSI for reading, but I just want to express to you that our KSI is really very unique. It's really not the same way on how to do that. Okay. All right. So this is something that you must really take note of that. Very, very important information here. Hang Seng, Hang Seng is higher, right? Hang Seng, let me take a look. Hang Seng is higher now. It just breached past the pivot one. Let's take a look here. Wow, all the way goes up. There's a KCB level at 29,398. There's a KCB there. And now Hang Seng basically got resisted at the 398 level. So if Hang Seng break below the pivot one, then there might be some profit taking now. So those who went long for whatever reason, then make sure that the market cannot breach below pivot one. If you breach below pivot one, then there will be some selling in the market. Okay. Okay. So let's look at gold right now. So this is gold. Now gold today has went up continuously for the third day now. Gold have okay, let me just bring it in. This has crossed the MLP, the black bar, so no longer in use. So today's MLP is somewhere around here. That is about 1720. So now gold is trading at 1730, and this morning gold, there is a CCRY position. I'll show it to you shortly. All right, what the weekly chart itself, you can see very clearly gold has maintained itself above the 1689 level, and seemingly it's going to cross the black candle for the weekly chart. Looks positive for the time being. And of course, silver beautifully has rebounded off at the MA 200 level. It rebounded nicely above it. That's why you can see the market rejecting its upside here. All right, having some resistance, but now it's crossing above it, right? The MA 30 now is about here. That's about $26.62. So as long as the gold goes up, silver will also follow through. It's something that we've been saying all the way. Okay, so look at the gold day chart with the TWB system. Now today gold got a few reasons to buy gold. Let me explain to you why. First of all, for gold itself, right, it's a CCRY position. So CCRY, we still look to buy. But of course, the previous time, the CCRY, we also bought, we didn't really make much money, but we follow through. That's the rule of the thumb. But the more thing is that today, why am I more confident? Because of the TSCB. The TSCB has a color change crossover. Can you see that? The TSCB is 1717, the level that I mentioned. And now it's a color change crossover. Now, I've been monitoring this with TSCB. When the market cross the TSCB with a color change, usually the upside is pretty strong. All right, so we can see now why this gold is trading higher, even though the trend is a bit downside, but still is staying above the high of the day. And this morning we already called for buy on gold. I already posted for the 3G group. So students, if you have remember to take a look at the Telegram group, you have saw that. But because the KSI is red in color, we can only do a half bullet sizing. And of course, if the market go to 1732, I will see whether the market will cross it. If we cross it, it will likely go to 1737 level. Okay, so which means that today's first resistance, it will likely be here at 1732. Okay, there's the first resistance, but the target today is a 1737 level. So that will be the KCB level 1737. So that will be the level that I think gold will be going for. And traders who went long this morning with me, you can actually consider to actually take some profit when gold hits around 1737 mark. All right, okay, so that is something that I want you to take note. Now, of course, do note once again, if the yields is going to go up itself, right, then the dollar will going to recover, and the dollar recover, that will have a resistant problem for the gold market. This one, you have to understand this in terms of fundamental. Technical is one, fundamental is also another very important thing to take note, especially we're talking about price sensitive like gold itself. Okay, this is very, very important. So traders, take note of that, okay? Okay, so that is gold covered for you already. Oops, sorry. So now look at the final one with Bitcoin. Now yesterday, Bitcoin has two good trades, and two good trades gave triple ticks trading. CCRY went up by almost $1,000+. Then after that, in the second trade towards the end of the day, another trade came in, gave about nearly $1,000 profit. Now this is really incredible. And of course, you can see that the distance now between the KCB is getting wider. Now, of course, that means the market is very bullish. That's why the KCX, the signals is getting wider. When the thing widen up, that means the bull market is very bullish because you don't see any much bars in between, right? So that's the reason why the Bitcoin industry now is full of buying momentum, okay? So let's look at Bitcoin before we go to our technical side. Now, Bitcoin today is still going up, all right, but now it's below OP, so no buying. But you can see that the KSI changed color from red to green, and after that, nice last few days, all the way going up. So will the Bitcoin break the all-time high at this 58,247? Well, from the way I look at it itself, right, it seemed to be able to do that. So as long as the market stays above the midpoint of the MLP of yesterday's Bitcoin level, then I believe that the market may purposely test, because today for Bitcoin, right, the pivot one is 58,963. And if it actually goes there, that means it will actually break the all-time high level. So I believe that this will happen. I say that again. I believe that if the Bitcoin can stay above OP, Bitcoin would be able to test the all-time high level. Now, once it reaches there itself, right, my concern is maybe it may just purposely test the 60,000 mark just for the sake of testing it. And once it reaches there itself, right, there might be some profit taking, okay? So my personal take is, if you are still thinking that the Bitcoin will go and break all-time high, you can consider buying whenever that's available. And then after that itself, right, you can aim at 60,000, and then you see whether it reaches there and whether you can encash some money out. Now, of course, some people telling me that maybe Bitcoin can go to, 60,000, 80,000, 100,000. I can say like you can go anywhere. All right, just that I rather play safe. So traders, you can consider to take some profit around 60,000 level. Okay, all clear? All right, if all clear is all right, can you key BTC 60,000? So at least that, I already warn you that if they will go higher, 60,000 could be there. If it's going to take profit, right, it'll be a good level to consider taking some partial profit at the 60,000 mark. Okay. All right, so guys, that is the part here. Now, today I do not have the extra alternate market analysis, so it's all about KSI. And of course, I think that will be a good time for you guys to revise this, a quick one. I know that you guys can't wait to stop the MAO. Okay, it's 1 hour, 15 minutes already. All right, so take note of that. Huh? Okay, now let me explain something to you about the KSI right now. Now, KSI, as I repeat and repeat, is nothing to do with indicator, as in it's not price indicator, which means that if the price goes up, normal indicator will also go up, right? But our KSI doesn't work that way. It really doesn't work that way. Let me explain this to you in a simple few ways, okay? Just give me a minute, let me show to you. Okay, you see guys, this is where the market was going up back then, right? But you look carefully now, the KSI itself, right, actually has turned red when it was on the way up. So what is happening is that when the market is on the way up, all right, I'll follow rules to buy accordingly, but because the KSI is red, I will be very careful. And you notice that when the KSI is red, right, most of the time you do see tail, top tail from the chart. That means the tail is on the top side, not the bottom. You notice that? So that means that if the market goes higher, right, if the market is above, trading above OP, example of the day, then when the market goes up, right, okay, when you go to KTR +1 or +2 or +3, once you go there, you realize that there will be some selling to bring it down. So that's why the tail is when the market goes higher, right, because the KSI is red, the market can't go and stay there. And you can go there, but once it hit a certain amplitude, right, it will just come back down. So that is the reason why I say when you see the KSI is red, you look out for sell signal. But if the market is surging, look to sell from the top. That's the first thing here. Now, if you're buying, you can just go slow in the buying and you can buy out. But once you go to KTR +1 or +2, do consider to take profit. That is how it goes. All right. So you can see that it repeated again back here itself when this happens. Okay. All right, you can see that the price was coming down, the KSI was red, that's fine. But you also see that when the KSI is green and the price is green, KSI is green, the market is green, upside, then all is good. But once it flipped, you can see it really flipped down. So you can see that the KSI is not an inverse indicator. This KSI itself is actually really following what you need to tell you. The KSI is a big boys indicator. So now, if you can understand this, now watch this point here recently. Why recently is when the market was going up, I'm not comfortable to buy, was because the KSI was red in color. So when it was red in color itself, right, you notice that although the market goes up for 2-3 days, but the selling is even stronger. That's why you see the tail is there. And of course, once the market changes from yellow to red, the selling is even stronger. Can you see that? So that is the reason why I keep on saying this. The KSI itself is to be used to let you know what is a better choice to trade, but it doesn't predict the future. Because there were times you were wrong. Example like this. There were times where the market was coming down very strongly, right? The KSI was green. Now, why is that so? Because you look carefully, previously, before the market went up, right, go down, right, the market KSI was red. So the market was selling on the way up. Then after that, when the market collapsed, probably the boys came back in to buy back the market. So of course, some people say that, okay, then what should I have done? Then you look carefully, guys, look at this picture here. You can see that most of the time itself, right, the KSI is green in color. The market have longer tail at the bottom. So that is for you to bottom fish from the market. Got an idea now? So the KSI itself, right, is more for you to look for better entry level to enter the market rather than predict for you where the market will be heading. So that is the point of the KSI. Got it? This is a very important lesson here. If you guys understand this, please key KSI into group chat. If you still don't get it right, you just key don't, D-U-N then I will know that how many of you understand what I just say, how many of you don't understand what I just said. Okay, let me see what's your answer. Okay. Okay. So, okay. Okay, since that some of you, most of you can understand, right? For those who don't understand this as well, right? Later on, next Tuesday, I will do another thorough revision on the KSI here. Okay, all right. So with that understanding itself, right? Let's do a last check on the market so that you guys can take a look. Okay, so let me explain to you. Okay, wait a minute, wrong chart. Okay, wow, you see the Dow Jones, the Hang Seng came down to the pivot level, and once it reached there, it stopped there brilliantly and recovers. So that tells you that why the pivot is so powerful. Now it can trigger the pivot, but you cannot trade the pivot because there's no color change. Okay, that's very, 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 very important. Okay, guys, this is the you can see now the NASDAQ over here. Okay, the NASDAQ has now tried to stay above OP. And again, I say, since the NASDAQ KSI now has turned green, then of course, you can see that every time when NASDAQ pulled back, there was some buying in the market. Okay, but overall, NASDAQ trend is on the downside at this moment right now. Okay, so that will be all for today. All right, that'll be all for today. Thank you for today's MAO. Sorry, apologies of so many messages coming in. I need to reply them along the way. But still remember this, guys. Just follow the charts. It'll be better for you. And I'm sure you guys are going to make good money today. All right, guys, take care. Bye-bye. Anything you can text me in the group chat. I'll get back to you. Okay, bye-bye.